Hey everyone, and thanks for jumping back into the Cryptoverse. Today we're going to talk about Bitcoin, and we're going to be looking at the fact that it is now blasted past 16K. We are flirting with that level. We've gone back below it a few times, but more or less we are flirting with 16K, which is somewhat interesting because in the past, when we kind of broke through these recent levels, we instantly rallied on up. So maybe it's a sign that there is some exhaustion in the market, and that there will be a pullback at some point in the not so distant future. But remember, Bitcoin has a way of rallying higher than people can often anticipate. So we'll see where it takes us. If you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel in the description below. Let's go ahead and jump in. So we've been following this Bitcoin rally. It's fairly substantial. If you look at our regression band, we have definitely come out of it now. We're printing a weekly candle, in fact, that is mostly above this regression band. And we've spent, if you take a measured move, if the last time we briefly came out of it was around 39 weeks ago. So it's been a long time. When we were in this region over here, we said many times that this is the accumulation range for Bitcoin. So, pack your bags, get on the train, because the train will be leaving the station at some point. Now, we have rallied up to 16K in the short term. Now, if you look at this move, just to give you guys an idea, I mean, this is quite substantial. If you look how quickly we have rallied here. And in fact, what I want to do is we're going to take the bars from this breakout starting, let's go all the way down here to the top. We're just going to grab those bars, and then we're going to overlay it to this move here. So if you kind of put it here, you can see how similar those two moves were going down to the bottom of the wick. If we kind of just go here, instead of going from, say, the wick, we just go from the candles. You can see how much more substantial this move was than where we currently are, as measured to the top of the wick. One of the things you can also note is if we take a trend angle, and look at how, and remember, this depends on the aspect ratio. So if you draw trend angles on your own chart, you could get something slightly different. Because if I draw this trend angle and then I adjust like the aspect ratio, you can see how it would affect that trend angle and whether it's measuring up to exactly the line that I'm looking at. But if we just draw this trend angle with this aspect ratio, let me zoom out a little bit so we can include both. If we use this aspect ratio, we were at about 70 degrees with this aspect ratio back in August of 2019. And then from here, we're just going to go to the candle, not the wick. This one is increasing about 50 degrees, which is good in the sense that it's not increasing quite as quickly. One concern, though, is the most recent move is increasing at 70 degrees. Okay, so over the macro scale, this was a lot better than what we had in 2019 because it's been more of a slower move up, which is what we want. A move up and then sideways, a move up and then kind of down, a move up. But this is quite a move because we're increasing, at least at this aspect ratio, at the same angle that we increased at back in 2019, and we know that was short-lived. Now, I'm not trying to say that to scare anyone. I think there's a really great chance that this is the bull market, right? This is the bull market. There's an incredible chance that this is the bull market. But again, people always need to be aware that we could drop back down to the 20-week moving average. Remember, the 20-week moving average, again, is our historical bull market support. Even in a bull market, we have 20, 30, 40% corrections that'll take us to the 20-week. We already had one, right? We already had one. And as you can see, it was approximately a 20% drop from the top. Okay, about a 20% drop from the top, which, by the way, was the same that we saw the first test of the 20-week last market cycle, as measured from this top all the way down. It was around 20 degrees. We then moved sideways for a while on the 20-week. Last time when we moved sideways, we did it for about 4 months. This time we did it for about 1.5 months before breaking up. Now, the question that everyone wants to know is this the move that will take us to 20K? Well, it certainly could be, but again, I don't think it would take us to a sustainable 20K. Even if you prescribe to 4-year cycles and think that the 4-year cycle is going to bring a 6-figure Bitcoin next year, you can see that we actually tested the local top of just shy of $1,200 last market cycle several times before actually breaking through it. And in fact, the first time we tested it was here back the very beginning of January. We didn't break it in a sustainable manner for another 100 days or more. So we're talking about another 3 months. And so even if we were to bubble at, say, 20K, or even if we went higher, there's a good chance that we would then come back down and probably flirt with that prior all-time high for a little while, just because we know that it tends to be a big mental barrier for Bitcoin to break through. I mean, it just needs a few tests. I mean, I think you can do it, but this again is something to be cognizant of, because when we see these moves above the 20-week, it's easy to let the FOMO overtake you. But let's plot something here. Let's plot the price minus the 20-week over the 20-week. So this brings up this indicator, and one of the things we can do is draw a trend line at where we currently are. So you can see it's currently over, above it by over 40% or so. And if you draw it over, you can see, let me actually make this a little bit bigger. You can see that we are nearing an exhaustion phase as compared to prior moves, okay? So during the last bull market, we had several moves above the 20-week and then retracements back to the 20-week. You can see that some of these short-term bubbles peaked exactly where we are now in reference to the 20-week, maybe slightly higher. There were a couple, here's another one that peaked exactly where we are now. There were a couple that rallied up to 50% above the 20-week, which is another, 5 to 10% higher than where we currently are. But again, it has to move quickly, because if it doesn't move quickly, then the 20-week will catch up. So it's the idea of how much faster is the price moving up than the 20-week moving average. We also had other bubbles that happened later in the market cycle that went up above 100% over the 20-week moving average. Okay, so this one actually was around 84%, 85% or so. The one in 2019, you can see we had these two little bubbles here, based on how quickly this first bubble moved up. We cooled off for a bit, and then we had another short-term rally. So we peaked there at around a little over 85%, maybe between around 85% or so above the 20-week. So it just gives you an idea that, yeah, we've had these rallies many times in the past with Bitcoin. That's why we're here, right? I mean, we're here because these rallies, these bubbles exist. But no matter whether you think Bitcoin's going to six figures in 2021, 2022, 2023, whenever you think that's going to happen, it doesn't change the fact that these short-term rallies do not last forever. It does not mean that the bull market's over. It just means that things need to cool off for a while. Let's move sideways for a bit, and then we can pick back up where we left off. So just recognize that we are getting pretty over the 20-week moving average here. If we put a line at 0, we can see this is the support line we want to hold. And you can see during the last market cycle, once we got above this 20-week here, we held this region as support several times. Again, this is on the weekly time frame. It would look slightly different on the daily time frame. And then now we came back down and tested that as support. Let's actually switch it over to the daily time frame so we can see it. So this is the daily time frame this would actually not be the 20-week anymore. This would be the 20-day. So let me just switch it back to the 20-week for now, because I don't actually have that resolution on hand. But this is ultimately the level that we want Bitcoin to hold above 0.00, because this means that it's exactly 0% above the 20-week moving average. We came all the way back down to be just slightly above it, a few percentage points above the 20-week moving average, about 5% above as measured on the weekly time frame. However, we know that we had wicks and candles that took us down, daily candles that took us down exactly to the 20-week moving average. If we go to the daily time frame on this chart, hide the regression band, zoom in a lot, and then we need to change this to be 140 days instead of 20 days. Now you can see we came directly down to that 20-week moving average. We went down there, and we almost went back down there. Okay, so it's a very important level for us to hold, and that's the reason why we follow it so much. It's not to say that I'm just wanting to be a broken record. It's just that there's a very well defined strategy, in my opinion, to stay successful in the space. And if you start thinking that, okay, there's these 10 other things that need to happen, maybe it's not as complicated as some people make it out to be. So now I just want everyone to be cognizant of the fact that the 20-week moving average, it's actually higher than 40 now. It's like 44% or so above the price. So we are getting somewhat overblown here. It doesn't mean that the rally can't continue. If it were to continue in the same manner as the one in 2019, which was about 83 or 84% above the 20-week moving average, where would that take us? Okay, so the 20-week moving average is currently at 11,500 or so. Now what we're going to do is we're going to take a measured move from that level, and I need to switch this back over to 20 weeks. So that puts us here. If in the immediate short term, if Bitcoin were to rally to be 83% above the 20-week moving average, which is about where it was during the peak in 2019, 83% above its 20-week. At the time, the 20-week was a lot lower, though. The 20-week was all the way down here at around $6,000. Now the 20-week is about double that, almost double that. So an 83% move above the current 20-week would put it over $20,000. That's just something to be cognizant of. However, remember that the 20-week moving average is increasing. So by the time that if Bitcoin does go to 20K in the short term, an 83% move above that level might put it even higher, right? I mean, it depends on how quickly Bitcoin gets there, if in fact it does go to that level. So again, I understand that it's an exciting time. We all want to see Bitcoin get to 20K. I also want to remind you that it's important to stay level-headed in this phase of the market cycle, because even if we do get to 20K, we're going to need to sustain it. And we know it took a long time for us to sustain 10K. Arguably, 20K would not be as big of a deal as sustaining 10K. I don't think it would, but recognize that it will probably take, even from here, at the very least, it will take, once we get to 20K, it would take several months, in my opinion, of proving that we can actually hold it as support. For now, we're still 16K. Over the macro scale, we're still more or less playing in the sandbox because we've only poked our head above our fair value regression band. This is the fair value. According to the fair value, the price of Bitcoin at the fair value right now is $10,335. And I always said it would be interesting if we never go below 10K once the fair value gets above 10K. Now that the fair value is above 10K, we'll see if we ever actually do go below 10K again. But remember that the 20-week moving average is what we want to keep an eye on. And it's currently at 11,489 according to this chart. Of course, this can vary by a couple $100 depending on what chart you use. What's a couple $100 among friends, and we'll see where things go. It's definitely an exciting time. It reminds you why Bitcoin is king. When Bitcoin makes a move, the market will watch, and now the market's watching. A lot of the market's probably hoping that Bitcoin cools off. But, as long as you have the right portfolio balance, this is not a big deal, because as I've said for a long time, Bitcoin has always been, it is, and it will always be the largest percentage of my portfolio. The only time that might briefly change, and I'm talking very briefly, is if just like I'm holding a coin that goes up crazy in like a week period and I just can't sell it fast enough. But that just gives you an idea. So let's look to see what happens, because we don't know what's going to happen. But if we do test the 20-week, again, it could be business as usual. If Bitcoin comes back down and doesn't test the 20-week and starts moving sideways, really great for altcoins, really great for things like Ethereum. If Bitcoin continues to rally, most likely most other coins will bleed against Bitcoin. So let me know what you guys think. We also do have the premium list. You can find access to that at intothe.cryptoverse.com. You get access to weekly reports, weekly videos, a Telegram alert channel, a Telegram chat room, a risk dashboard, and some of these TradingView indicators. So if you guys want access, you can pay into thecryptoverse.com, and if you want to pay with crypto for 12 months, you can get a 15% discount. I hope you guys enjoyed the show. Let me know what you guys think about it in the comments. Please subscribe, give the video a thumbs up, and I'll see you next time. Bye.